Hello, friends. This is Giuliano, and it is the 23rd of March, 2022. I'd like to share with you BTC dump update. Yes, I am feeling really good about it right now, generally speaking, because, today, even earlier, I made a video, but after making the video, I realized that there's just something that was not making sense to me. It was not feeling right. I didn't think it was playing out the way that originally the thinking was going. And so I looked further into the Glenn Neely Neowave, Mastering Elliott Wave literature, and I looked at the flat patterns, and I got more clarity. And now I'm much more clear. And although the way that I was thinking it was going is still on the table, but I get the sense now I have much stronger argument for what I'm about to tell you. So what do I have here? Firstly is the flat pattern itself. I'm calling this a flat pattern because it's corrective, okay? Also, the reason I say it's corrective is, and the reason I'm thinking that it's all connected all here instead of, just this being the beginning of the downtrend is that it spent a lot of time in a corrective mode without retracing very far. Like, okay, personally, I take the move from here as the impulsive move up, and then we end it over here, and then we start our correction. And in that case, we barely wicked down to a 50% level, not even, and we've closed above a 38 level, 38.2 level. So this retracement is thin, to say the least. Is a very strong retracement level. So in my opinion, in that way, it is a continuation pattern. So whatever impulse we've got going, we've got a corrective pattern that's continuing the move higher. Now, you might want to take your move from down here. That's fine too. In that case, it's even less than a 38.2% retracement. But for reasons I won't go too far into right now, if at all, I'm just pulling it from here. So that's fair for me. So in that sense, I guess I want to take first a bigger term view, because what we're looking at here is a flat pattern. I mean, I know that this is not the way exactly to do it, but neither is the candlestick version. There's a more specific way to chart the data. And then even having said that, the cryptos and the Bitcoin don't necessarily move as intended always. Is a slightly different psychology. It's traded 24/7. It's just a different market. Let's just call it that. So it doesn't always exactly follow things, but this is a textbook flat pattern. If you were going to draw it in a Neely method fashion, if it's a downward correction, you'd have your A wave down, you'd have some sort of subdivided B wave up, and then you'd have a C wave down. That's incredible. And if it were a C failure, it would consume time and kind of sidewind. That's why I'm calling this BTC sideways, dump update is becoming sideways update, okay? Where are we? So flat pattern beautifully. I'm just still stuck on flat pattern. I don't see it being an A, B, C, D, E or something like that. I'm looking for this next higher degree impulsive wave that's the same degree as this and the same degree as this, so that we would have the next wave up. Does that make sense? That right now, this move here, and this move here are the same degree. And all three of them together form the correction called a flat pattern. And together they form a pattern that's the same degree as this pattern. And that's the same degree of whatever is to come next. And that's what we're waiting for. And that's what I think is happening. That's what most people think is happening. They just don't necessarily conceptualize it in this way because they're not using Elliott wave or even Neowave thinking. And that's totally fine. It's whatever works and whatever helps understand market structure, market dynamics, price action. That's all that really matters. So whether you use bars or candles, but anyway, for Neowave, there's specific ways to follow it. But having said that, even the candlesticks help to follow the logic These days, for me, the candlesticks are more helpful than the lines. But what the lines do help me do is to cut out some noise and to find the right pattern. It's the line chart that helped me see this potential pattern back up here. And now it's playing out. Months later, we're finding that it seems to be coming to an end. So not quite clear where and how it's going to end. That's for the lower degree timeframes. But what matters is the bigger idea. So for that, I'm going to just look at this idea for the higher degree impulse wave. That's the same degree as the entire ABC flat correction and the previous impulse before. Now, like I said, I'm going to take the impulse from here. Okay, well, let's go to candlesticks. That's because it's the biggest, fastest move. And I don't, because this retraces so much here, I don't think that these are connected with this in an impulsive way. Maybe they're connected in like as parts of a bigger corrective degree to the upside, a corrective rally, but let's not get into that right now. So what I'm going to do is extend this move up, okay? Because in the Neowave logic, Glenn Neely is saying that if there is an irregular flat, okay, the reason there's an irregular flat is because this B wave gets higher than the beginning of the A wave. So if we were to take an ABC, just don't worry about the degree. It's kind of like unit math right now. Let's imagine we had an ABC, right? This B is retracing definitely more than 61.8%, okay? And it's in fact, it's retracing more than 100%, okay? So it retraces more than 100%, that makes it an irregular flat, but it's not a super strong one. It's not remarkable, not at 123.6 or more. So in that case, we can treat it somewhat like a common flat, but it's got strength to the upside, tells us that price action is strong to the upside, that the C wave doesn't have to surpass the A wave by fully retracing the B wave. So, and now the question is, what kind of C wave will it be? So we know it's an irregular flat in that sense, like nothing is guaranteed, right? And none of this is financial advice, but generally from the logic, we can surmise that this is a flat pattern, and it's an irregular flat because of the height of the B wave compared to the A wave beginning. The beginning of the A wave, B wave surpasses that. And don't forget, all of these patterns, they are invertible. And so this itself would also be the same pattern, just in a different direction of the price chart. But let's not confuse ourselves too much here. So the flat pattern, irregular flat, B wave exceeds the beginning of the A wave. Next, we have the C wave. C wave, now here in this this idea here, it would be a C failure if it doesn't fully retrace the B wave. And in that sense, a C failure has some special properties as well that we'll talk about involved in this flat, and that has to do with where it ends. And yeah, so that also reveals the price action having a bias to the upside. It's almost like something that should have been parallel. Imagine something that should have been parallel is instead that thing that should have been parallel is kind of being dragged upward. So it's still parallel, but it's being dragged upward. So that price is being dragged upward. And in that sense, that's even over here, we're getting this upward drag in the price. And that's where we're going to go on the lower time frame. But before we go there, I just want to revisit here this higher degree impulsive wave, same degree as the ABC flat correction and the impulse before it. Let's see, where does that take us? Let us see, where does that take us? We're going to take an extension pattern from the low to the high to the low, but where does it finish? If it finishes around here, that's even more bullish. That's about 250K, and we'd be looking to go more than 1-to-1, because this type of price action means that the price is being pulled upward, so it has strength to go more than 1-to-1 compared to this. So that pulls us to a nice 250,000 or more. Do I think we make the 161.8 at 730? I don't know. It depends what this all becomes. But based on some channeling and that sort of thing, I don't think so. However, anything's possible. So I don't think it goes there, but this is definitely a clear indication that 250,000 is, or 243,000 at least, is on the cards. Okay, yeah, let's take it. So, ooh, that's interesting. 250K, right? The exact number doesn't matter. It's more the zone, and we can look at the channeling and other stuff at that time. Okay, so there you go. That's a big move to the upside, and make sure you got your ticket to ride. So we move to a lower term time frame, and that's the weekly price chart. And there's something I want to bring to your mind. So we're calling this an irregular flat, a C failure. Now I want to remind you that here, we're going to put this on the daily only. Daily only. Sorry for this, but okay, daily only. And I want to remind you a couple of ideas here from the Neowave logic and way of thinking, okay? And that is the idea of a pattern completion. A pattern doesn't necessarily complete at its low, okay? You could have a lower price here and the pattern itself completes here. And there are reasons and ways to look for those things, but I'm not going to go into it here. Just the idea that the pattern completion is not necessarily at its low, okay? So maybe the A wave doesn't finish at this low, maybe it finishes here, whatever, okay? Point being is that we don't necessarily, for the end of the C wave, we don't need to see a new low. And just because this is the low down here doesn't mean that's the end of the wave. Now, when you have a C failure, it can be constructed by a terminal impulse, okay? Because in a flat pattern, the first wave is a 3, it's an A wave. The second wave is a 3, it's the B wave. The third wave is a 5, it's a C wave. It's an impulsive wave. So we have 2 corrective waves, A wave corrective, B wave corrective, C wave impulsive. But when you're getting this kind of action, then we're looking at this as a terminal impulse. And to quote Glenn Neely, a terminal impulse is the perfect way to consume time without damaging price levels. Terminal impulse is the perfect way to consume time without damaging price levels. I think that is something to consider and something that really cleared up a lot in my mind. Also, just reading more about C failures and getting more clear on terminal impulses. Okay, and I'm going to get into that as we go to a lower time frame. So, having said that, I just want to drop in the Ichimoku cloud for our friends here. We might have seen our days in the Ichimoku cloud. They might be over, or just finishing, and we might be coming back down. But if my sense is correct, then by next week or the week after, it's time to be starting to impulse to the upside. So let's take a look. Maybe, maybe not. Okay, we are not sure, not certain, but based on this thinking, which seems to be accurate so far, it has been very helpful so far. So I'm going to keep going with it, and I hope you're still listening and watching, and that it helps you along the way. And it'll help us for next time. Although we won't see the same thing next time, but we'll be able to think more clearly, I hope. So what am I seeing here? Okay, got a lot of noise here. I want to just expand this. Yeah, on the weekly time frame, also that MACD, the histogram, it's so close to getting positive. It's like, forget it. We are so close. I can feel it. And that's why this was not making sense. It's taking too long to complete to go to the next downside. However, I did consider that it's definitely possible. What's this? Not even sure what this is. What is this? Elliott wave corrective wave ABC. Where's the A and the B, friends? Why are you confusing me more? Okay, so I'm getting out of here with this done. You're deleted. Delete you. Editor, please. No editor? Okay. what are we looking at here? This is the end of the B wave potentially here, which is a corrective 3 wave. Now we begin a C wave, okay? A C wave, which would be an impulsive 5 wave. But in this case, if it's going to be a terminal impulse, okay, if it's going to be a terminal impulse pattern, then it's, in fact, the C wave as a terminal impulse pattern is going to be a corrective move. It's going to be a 5 wave move, okay? But each of those waves are going to be corrective. Okay, so yes, it's an impulse, but it's a terminal impulse. And the way that it's constructed, those 5 waves in the move, the way that they're constructed is they are corrections. And that's what was confusing me a little bit, is the idea that at least the 5th wave, I kept looking for, and you might have even seen it if you look back in the previous videos. I'm counting these as like 1, 2, 3, 4, 5. So clearly I'm miscounting them. But luckily, we're fitting the larger pattern onto the smaller time frames. And it was quite clear that we're in a C wave of a flat pattern, although we were still not sure. I was still not sure, but eventually it became clear, and I deleted the other options just because this is much more possible than something else. And now I'm almost convinced. And so the idea being that this 1 wave is actually a corrective 3 wave. This 2 wave is a corrective 3 wave. The 3 wave is a corrective 3 wave. 4 wave is a corrective 3 wave. And the 5 wave is also a corrective 3 wave. The whole thing is a terminal impulse. The 4 wave trades into the 1 wave price action. See here, trading into here, okay? And and then we're gonna see where does, remember the 5 wave, the 5th wave, sorry, the 5th wave does not have to end below the 3rd wave. We could fail. We don't have to end the pattern at the lowest point, okay? Now even what was getting me though was like, okay, if this is a 1 wave, okay, instead of an A, B, C, D, E, which is 5 waves, but it's a corrective pattern, okay? It's 5 waves, so it gives this sense of a terminal impulse, because a terminal impulse has 5 waves. So I was thinking maybe this is a terminal impulse, and it was going to either do something like that, or maybe this one would go bigger, and then we'd have a failed move here, whatever it would be. But I thought there would be 5 waves. 5 waves like the E here, but at 1, 2, 3, 4, 5. But it wasn't actually, because again, it can't be 5 waves. It has to be, well, it can be 5 waves, but it can't be an impulse in that sense. It has to be a correction. It has to be a correction. So if it's going to be 5 waves, it has to be a corrective 5 waves, which is a triangle, an A, B, C, D, E triangle. That could be a 5 constructed waves to make a corrective 3 pattern. So that was the biggest thing. I kept thinking that maybe we need 5 waves as some sort of terminal impulse of its own. So yes, the 4 wave trades in the 1 wave, and we get a terminal impulse already. But maybe the 5th wave itself could be a terminal impulse. But that, I realized no, because that would be a 5 wave. A terminal impulse itself is a 5 wave. So this whole thing is a 5 wave because it's a terminal impulse. But the 5th wave of the impulse here, the 5th wave, if it has 5 waves, it wouldn't be an impulse move. It would still be a corrective move. The 5th wave has to be a corrective wave. 4th is corrective. 3rd is corrective. They're all corrective in a terminal impulse pattern. So in that sense, this 5 wave has to be corrective. And if it is made of more than, so usually a corrective wave is 3 waves, 5 waves, if it's a triangle, 3 waves, a zigzag or a flat, 5 waves triangle, 7 waves or 9 waves if you're going further into diametrics and symmetricals. But we're not going there. And it doesn't look like that's happening because of time, We're getting, like, this is taking too long. So, but it is showing more than 3 waves. Like we have 1 wave down here, we have 1 wave up here. Sure, maybe this whole thing is a 3rd wave, but it's taking too much time. compared to what's coming before. And this whole thing here, sorry, this whole thing here is taking more time than the 4 wave. How can a bigger degree wave be smaller than a smaller degree wave? That doesn't make sense. That's why it was no longer making sense for me, and I was trying to fit it, and it was just not working. Like, it was working a couple of days ago still, but then something changed. Something changed, right? The price action just did not comply, and now it's 90% clear to me, at least now. I could be wrong again, obviously. Like, we could have a turnaround tomorrow, because in one way of counting it, yes, it's possible actually that we could be making some sort of A and then a B. No, just doesn't work like that for me. Really, it doesn't. Maybe this is the 4 wave, A, B, C, yeah, and you get a 4 here, and then we start this 5th wave. But again, based on, see, that's perfect. It literally said no. It literally said no. That's not true. You can't, because now this move here is not significant enough. Like, this move is more significant. That doesn't make sense. We would need something to be more obvious and big in order to give us a sense of like that this could be the first wave, either the A. Well, it would have to be at the A because it has to be a corrective pattern. So yeah, it would have to be the A, the first wave, the A of whatever corrective pattern, maybe A, B, C. Okay, so yes, that's possible. I guess that's all I wanted to say is yes, we could do this. Okay, and it would still all fit. And yes, we'd be grabbing all this liquidity down here. So I really do believe this can happen as well. But it's just, unless it happens tomorrow. So yes, if it happens, it's got to happen by tomorrow. Otherwise, there's just too much time being taken up here. And that brings me back to that quote about the terminal impulse. It's meant to take up time. The terminal impulse is meant to take up time without making the price go too far down, or in the other way, too far up before it reverses. And so in this sense, we're looking here, okay, what do we have? We have 1, 2, 3, 4. And now we're looking for, what does 5 look like? And 5 is getting big compared to 3, compared to 1. 5 is getting long in time. So it's got to be near completion as well. And in fact, 1 + 3 + 5 is right here, give or take. It's April 3rd. And depending on where you start the waves, it's between the 28th of March and the 9th, I believe, of April. Maybe the 6th, but we'll just say the 9th. Okay, just for fun. So in this kind of time zone here, we're looking for the turnaround. All right, that would be a fair turnaround where 1 + 3 equals 5. Okay, in time. Okay. Now, having said that, then it just shows also that upward pulling of price in this terminal impulse. The 3 wave is the lowest price, and then technically the 5th wave is a failing wave, but it's part of a terminal impulse anyway. Okay. Now this triangle itself is not exactly the cleanest in terms of, where do you start? Do you start here or do you start here? Based on Neowave logic, I want to start here. And then that already makes this some irregular kind of triangle because the B wave is longer than the A wave, but it is allowed in triangles. So that doesn't necessarily break that rule. And their time is roughly 1 to 1. So it's not anything significant. Now, the A wave and the A wave and the C wave are related by 61.8%. The C wave is 161.8% of the A wave. The A wave is 61.8% of the C wave. Okay. I'm going to show you. I'll do that for you. I guess we're making this a little bit longer because this is a significant update and no FOMO, but because we're still waiting for that E wave. Okay. Otherwise, I'm really confused. If we don't get at least a small wave down, maybe to 40,000, then I'm really confused. Okay. 40, 41,000, whatever it is. Probably like 40K level. Whatever, 40, 41, I keep repeating it. It doesn't really matter. It's more so that we do, based on this counting, we would still need one move down. So no FOMO, that's all I'm trying to say. Let me just catch my bearings here. So we have, yeah, we're doing the time. So if we start from the highest point to the lowest point, that's the A wave. Go to the highest point, the B wave. Wait, where are we starting though? Let's just take it how we know how to take it. Okay. So the biggest, fastest move. And then we start at the biggest, fastest move. Oops. There, we start going down there. So it ends, if the C wave ends here or here, okay, it's 161.8% of the move. Oops, that's not what we wanted to delete. Let's do that again. So we take the A wave from here down to here, and we look compared to the C wave. And technically, we could argue that it ends, oops, here, where that lower wick is. But in fact, that's what I would do, is I would say that it ends there at the lower wick, and then it starts going up from here. So that's at a 161.8. But you know, it's arguable. You might take the time. Oops, no, that's not what I'm looking for. You might take the time from here, but take it from here. You might want to take it from here. I just don't think that the 4 wave ends here. I think it ends here. So that's just my sense of it, which makes it tougher on the A wave to the B wave comparison, but at least makes it, makes it easier on the A wave to B wave comparison, because then at least the A wave and the B wave are closer. So everything I've been doing has been from about here at the beginning of the 5th wave and the end of the 4th wave. So we get this 161.8 relationship. Okay, and then we also get a nice clean relationship with the B wave to the D wave. If we end here, okay, the D wave, if it ends either today or tomorrow, roughly. Okay, so if it's a 61.8% relationship now, where the B wave, oh my bad, what am I doing? My bad, really my bad. That did not make sense to me. So let's grab the B wave. Now we can find it from here and here. So here is the 161.8. That's why it didn't make sense. I'm like, what are you talking about 61.8? I was finding you at a 161.8. The D wave was 161.8. That brings us to about the 25th of March. Okay, so around that time, maybe the next day or 2 days. So this is still new to me in terms of, I've been trying to do these measurements and stuff, but to consider it like this, I haven't been doing that. I've been doing the measurements in relation to slightly different counting. Also, okay, so let's just do that one more time. We go for the time A compared to C, and we get a 161.8. There's this wave ends about here. Okay, so that's the A to the C. B to, if we end the B here, oh, sorry, that's what I did wrong. I'm starting at the B. Friends, remember, pay attention to what you're doing. Don't start at the B. Beginning of B is here. It's the end of the A, goes to the B, and now we can measure with the D, and there's the 161.8. It's about 25th of March, okay? Wow, I'm just too excited. Like, my mind is kind of racing right now. I feel like I'm wanting to get this out to you as clearly as possible, and that's why I'm going over it again and stuff, just because if you are watching this, I'm hoping it's valuable for you and informative for you. And I want to be clear for myself. I've had a bit of an epiphany today in that sense. And so here's the other reason why I'm thinking we're ending around here, because also Glenn Neely says in the Mastering Elliott wave, says that the terminal impulse, if it's in a C wave, the C failure, okay, a C failure is going to end the pattern around 61.8% of the A wave. Okay, and in a C failure, you're gonna, in an irregular flat In the C failure, we're expecting to end 61.8% of A wave. So if we were to take the A wave, boom, and compare it with the C wave, boom, this, I've already measured it out, is 61.8% of that level. So we'll just do it again for fun. Extension tool, beginning of A wave, end of A wave, beginning of C wave, 61.8%, 61.8%, around the 42,000 level. Okay, so that's where we are roughly going to end. So I was saying 40, 41, 42, that type of area is around the 61.8%. He says zone. He says zone. So it could, I mean, I wonder if that means it could be on the upper end, like a 61.8 on up here where it would finish, but that doesn't seem right. That seems probably more like a, well, yeah, because it could. Anyway, I'm not going to speculate on that right now because we're not even close to that. This just seems even more right. Look, so these two lines here, this line here, this 1 plus 3 equals 5 on a time axis, and this line here, 61.8% of the A wave on the horizontal axis. Okay, time axis, price axis, vertical axis, horizontal axis. We confluence at this area, which leaves a lovely, beautiful E wave potential to finish off 5 waves, which would be a triangle, okay, because they're corrective, which makes the 5th wave of the impulse pattern, okay, the impulse pattern that creates the C wave, okay? So this seems about right to me. Now the last set of measurements we'll do is to check if the D wave ends on, we said the, what, 25th, right? So we're gonna compare D wave and take 61.8% of that and 161.8% of that and see where that leaves us. So, because we're gonna compare that to the E wave. So oftentimes, so you saw, hold on, you saw that the E wave, sorry, that the A wave was compared, sorry, I did it again. The A wave was compared to the C wave. The B wave was compared to the D wave. Now we compare the D wave with the E wave. We could also compare the E wave with the C wave and the A wave, but they're different enough that we will just compare the D wave with the E wave instead. So here is, what's going on? I think I froze somehow. Uh-oh, we got disconnected. You gotta be kidding me. Right in the middle. No chart service. This is bogus. Give us a second here. Just fast forward, okay? Okay, we're back. All right. Oh no. All right, well, here we go. We're nearly there, friends. I hope you're still watching this because this is getting real good. All I'm saying is we're at this point, right, where we're going to get to that E wave. So let's see where could that E wave be, and based on what the time was looking like, I was saying we compare A wave. Sorry, we compare the A wave with the C wave. Okay, we compare the waves in the same direction. A wave and C wave go in the same direction. B wave and D wave go in the same direction. So you could compare the E wave with the C wave and the A wave, but because they're different enough, A wave and C wave, then we compare the E wave with the D wave. So I'm going to do that again. I'm going to take the time of the D wave, go to the 25th, we said, and from there, we're going to take a closer look, and here we are again. So this is a 61.8% right here, in green, sorry. In green, this is the 61.8% of time. So that's around the end of March, 31st of March, okay? Then 161.8% of that would be a 10th of April. So yeah, I had said about 9th and the 28th. So now we're seeing between roughly, anyway, around the 31st seems to be more reasonable now. I mean, we could go all the way to the 10th of April, but that just seems to exceed. That would mean that probably the D wave is higher and takes longer, or it goes higher, and that's where I just see it even makes me want to say maybe the C wave isn't finished, and instead we're still got to go down to it. But then it makes the whole thing too big compared to everything else. Like I said, even compared to this fourth wave, it becomes too big. And now we're having a smaller degree wave being bigger than a bigger degree wave. Doesn't make sense logically on that level. So I do like this end of March timeframe. Okay, so there you go. And yeah, based on the fact that we're maybe looking for 1 or 2 more days, I can see the price going higher, maybe hit that 43.5 level, come back down, and then boom, you're gone. Where does it come down to? Around this 61.8 zone, between like 40 and 42, that kind of area. Okay, where's 40? 40 is down here. So I don't even think we make it to 40. Unless, well, yeah, you could. You can always break down below the triangle. And in fact, it doesn't have to be an A to C trend line. Doesn't matter. Anyway, yeah, you break down below it and then you go higher. That's fine. Okay, so this is our time frame. Okay, over here, it seems better than over here, but anything can happen. Ooh, so there you go. That's an E-wave. Now, the last thing I wanted to do is some retracements within this triangle. Now that we're here, I mean, if you're still watching, then you're interested in this lower term time frame counting type stuff. Whereas if you've already clicked off, then you just care about the bigger picture and you've gotten what you need. Good. So let's retrace. We're going to compare the A wave to the C wave in price. We did it in time. Let's compare it in price. Okay. So we take A wave to C wave, and well, roughly it ends around 61.8% of the A wave. If we want to take the lowest price, then you could argue it's around 78.6, which is a reasonable Fibonacci in my opinion when it comes to crypto. Okay, however, let us now do the B wave. So correctly starting at the beginning of the B wave, not at the end of the B wave, going to the end of the B wave, starting from the beginning of the D wave, we see, well, 61.8% is definitely higher if we're comparing this B wave with the D wave. So if we are going to get that, then we need to raise this line, and it actually becomes a horizontal triangle with like an uptrending support line here, basically an ascending triangle. So that's also possible, I guess, based on this type of Fibonacci relationship. Okay, we'll do that again just to confirm for ourselves. Oops, we won't do that again. We'll take our price extension, start from the beginning of the B wave to the end of the B wave to the beginning of the D wave. The reason I'm taking the beginning of the D wave here and not here is because it retraced too much, although it is corrective. So we could argue it's here, but time-wise, it was decent wherever we go, one candle or the other, doesn't matter. Okay, fine. Then that would just maybe lower our triangle like to here if we're at the 61.8%. So it still has this kind of upward leaning bias. But at this point, I'm actually liking this level here as a potential level for the triangle, definitely. But either way, you know, we could just be ending in the next day or so, in which case I think we're looking at a lower price before the turnaround, and that means not really any Fibonacci price relationship between B and D. Now, if we look for a price relationship between D and E, that'll be tough because we don't know if it starts here or if it starts here, but we can do that. So we'll start from the D, beginning of the D here, and then we'll go to where, like, it's around here now. So let's just say this is top, a 38.2 retracement would be around 41, so that fits. 61.8 is a little too low. I mean, it could, but then you're really breaking below this A to C trend line here. If we take it from that 45 level roughly, then there's definitely room for a 61.8% retracement. That comes down to this level here, around 40,000, 40,500. So yeah, I mean, that's if we're gonna find a relationship there. Anyway, I think that's it. I don't really have much more else to say. I've said so much already. I hope this has been helpful, and I hope it hasn't been too long and taken too much time. And I really hope that the disturbance of getting disconnected there didn't hurt too much. So yeah, there you have it. Looking for a turnaround. Is this going to be the final pattern before the next move? Or is it going to be revised? And are we going to see instead that move down? And is that going to be the pattern that's created? So far, this is the best guess now. Okay, we have updated the BTC dump update to a BTC sideways update for this nice C failure price action of an irregular flat pattern. Beautiful stuff. Thank you for watching. I hope this has been helpful for you, informative, educational, whatever you say. And yeah, I really, really look forward to what's going to come. And I hope you're here to stick around for more, because hey, we're still at the 40K level, and we're waiting for something like 250, right? Anyway, so that's it. That's all I have for you today. We're so close. This momentum here is just edging towards the green histogram, which will really be a push. But I could once again be really off on this one. I really could. But overall, things have been going well so far. And despite a bunch of confusion based on my own conceptual understanding of C failure flat patterns and just Neowave logic itself, well, I'm here now to clear that up for myself and for you. Okay, that's it. Wishing you all the love, peace, and happiness you can manage. Wishing you a big full bag of BTC, and wishing you all the self-sovereignty that you can manage as well, of course. Goodbye.